I want to start with those provisions. You set aside more than expected. Will this be enough?
Well, good morning to everyone. We've put aside a significant amount of loan loss provisions, but half of the increase as compared to Q2 19 is due to what I could call prudential provision, i.e. Provision covering sound performing loans. So actually it's a very prudent approach that we have had on this provisioning effort, and this provisioning effort was made possible by a very robust operational performance.
We were just talking, Jerome, about the Bank of England's outlook for the UK economy. They said, unfortunately, they see unemployment rising materially through the end of the year. On the other hand, the Bank of England expects credit losses in the UK to be a little bit better than they expected in May. What's your outlook on the French economy, especially in terms of credit losses and unemployment?
Well, the French economy is rebounding very, very rapidly, very sharply after the lockdown period. And actually, all indicators that we see across the French economy since the middle of June are positively, very positively oriented. And we find exactly the same evolution when it comes to our own activity indicators. All our activity indicators are sharply up in June as compared to May. And this continues across July up to now. So we are reasonably optimistic about the possibility for the French economy to really overcome this lockdown period and to find back a more normal pace of activity.
Speaking of the French economy, what about your outlook on retail activity in France and abroad? Given this lower for longer interest rate environment, what are you seeing and what are you expecting for the rest of the year?
Well, it's true that one of the outcomes of this crisis is that we are going to have negative or nil interest rates for a longer period of time than what we had initially expected. But within Credit Agricole SA, the listed vehicle of the group, actually only 1/3 of our revenues come from net interest margin. So it means that we have the capacity actually to generate revenues with fees, commission, insurance revenues, trading revenues. And so this is providing a very good resilience to our capacity to generate revenues and profitability. So this is really a key element of our robustness. Besides that, what we are seeing, as I said earlier, is that all activity indicators within our retail networks, it's the case in France, it's the case in Italy, it's the case across Europe for all our consumer credit businesses, there is a very sharp rebound in activity in June and further in July.
You know, I often look at share performance on a 5-year chart, Jerome, and I'm looking at your shares over the last 5 years. You outperform local rivals BNP Paribas and Soc Gen, but banks in general have done a lot worse than the broader benchmark CAC 40 index. Do you think that it's time for that to turn around right now, or are there restrictions that you have been given, for example, the ECB recommending still no dividend payout through year end? Are those kind of restrictions holding banks back?
Well, it's true that banks have been underperforming the rest of the market in the last period of time. I think that many reasons can explain this underperformance. When it comes to our stock and when it comes to our performances, what I can say is that last year we've managed to generate a return on tangible equity for the listed vehicle of the group, which was close to 12%. For the first half of this year, we are at 8.5%, and you know that the first half of the year is earmarked with a significant amount of taxes and contribution to the Single Resolution Fund. So it means that actually on an annualized basis, we would be already close to 10% of return on tangible equity. we have a good visibility on our capacity to continue to generate that type of profitability going forward in the present circumstances. So it means that actually we are offering to our shareholders a good visibility and a good level of profitability. Then, of course, there is the more global issue of the outlook of the European economy, the Eurozone monetary policy, and all the regulatory constraints that we have to withstand. But nevertheless, in this space, I think that Crédit Agricole is really a listed vehicle that is attractive, that should be attractive to shareholders and minority shareholders.
Attractive today, you're up 1 7/10%, but why would a shareholder want to buy your stock if you're not giving dividends? Will the dividend return in 2021?
Well, we are going to see what is going to be the policy of the ECB. But what I can tell you is that first, we are accruing a dividend on 2020 results, and actually we have already accrued 24, I think, cents a share end of June for a potential dividend to be paid in 2021. And our solvency, which stands for the listed vehicle at 12% end of June, is far above our targets, considering the fact that we belong to a bigger group, which has a much higher solvency at 16.1%. So we perfectly have the capacity to continue with our normal dividend policy, which is to pay to our shareholders 50% of the results that we generate.